Hey, my name is Jon Johnson, and this is your weekly market recap. Rates flash. So over the past year, they have been steadily increasing. Some days you get good days, some days you get bad days. The Federal Reserve did hike their interest rate 75 basis points, which many people have they think the interest rates are going to fly through the roof every single time they do that. Many times interest rates for 30-year mortgages actually go down during that time, which we did see for about a day. But when you have inflation still crazy high, 7, 8%, that's going to be the main driver of interest rates continuing to go up. Good news though is that as soon as inflation starts going down a little bit, everyone projects that interest rates will start going down as well. NAR and MBS Highway data. So Fed funds rate, once again, it has been hiked 75 basis point and is now at its highest rate since 2008. This is how people get short-term loans. So people that are trying to get construction loans, business loans, also sometimes it can roll into car loans. But this is how they're able to borrow for, banks borrow from the Fed and then the Fed will lend out these rates. Rent fell by 0.7%, but it's still up 5.9% since last year. Last year, rent increased 18%, which was the highest ever. So once again, people talk about interest rates all the time, but if you're renting, you're paying 100% interest, and rent will just continue to increase. So you might as well at least try to see if you can purchase a home. And if not a home, then a manufactured home, because those products they look very nice nowadays. They look like actual stick-built homes, have the same safety and security, etc. Home purchase applications fell 1% from last week, so they're down 41% from last year. It's just one of those situations where we still have buyers in the market, buyers that have been looking. So, I mean, it's still a seller's market, meaning that there's going to be sellers having majority of control in the market. But if we continue to see purchase applications falling and people not actually applying for mortgages, that's going to make it to where it can potentially switch to a buyer's market where buyers have a little bit more control. Refinance applications remain the same from last week, but are down 85% from last year. So all those people that, a majority of mortgage lenders, 90% of their business is refinances. And so as soon as those go down, a lot of mortgage lenders either get out of the business or they start trying to talk to real estate agents and other people about purchase deals. Companies like myself, we've always had much higher percentage of purchase contracts, meaning 80% of our deals have always been around purchase contracts, people trying to purchase a home rather than refinances. So anytime the market shifts, people are always purchasing a home while people are not always refinancing. Adjustable rate mortgages are up to about 15% of applications right now. They're not a bad product, especially if you're getting a 5-1 adjustable rate, which means that you get the same rate for 5 years, then it only adjusts for 1 year every year afterwards. You can refinance, after about a year in these products. So as long as you're once a year checking out what mortgage rates are looking like and potentially refinancing, they are a good product for people, saving them 1 to 2 percentage points, which could end up being close to $200-300 a month, depending on the home and monthly payments. Number of first-time buyers fell to a record low, 26% of the market. So this is a very big stat in my opinion, because this is the whole reason why I'm in the business, is helping people be able to purchase a home for the first time, and then using that home to refinance to be able to pay off debts. And if people are not, able to afford homes, it's becoming a big thing. An average age of first-time home buyer is up to 36 years old. Overall, I think this is because the majority of people are only looking at stick-built homes. There's many creative ways to be able to get factory homes, so manufactured homes, modular homes, etc. They're not like your grandmother's manufactured homes that were built in the 50s, 60s, and 70s. These newer ones that were built in the last, 10, 20 years, and you can even get new manufactured products as well. They look like simple homes. They're as safe and secure as them, and they have a very good product. So I think that stick-built homes are going to be a little bit tougher for first-time buyers to get, but factory homes can be a little bit better and easier for them. We can co-host events and home buying classes with you. So if you're a real estate agent, definitely reach out to us. We can be able to do those for you. I do them every single month, along with putting constant videos on YouTube. Reverse mortgages. This is a thing right now. It's not for everyone, but if someone needs an additional $200, $300, $400, $500 a month into their into income and they're over the age of 62, even as low as 55, but it's recommended 62 or higher to get it, it can be a product for some people. Lock and shop. If a buyer is trying to lock in a rate now while they're shopping, they can be able to do that. And if they're trying to get a new build, we can also lock loans up to 330 days. Still, Hometown Heroes, one of my favorite down payment assistance programs right now, is giving first responders, nurses, teachers, firefighters, even massage therapists, physical therapists, etc., up to $25,000 in down payment assistance. Other programs, especially in the state of Florida, are normally going to be around $10,000 to $15,000 in assistance if you're a first-time buyer. Our team is available on the weekends. So if you have any questions, definitely reach out. And I hope that you have a wonderful weekend.